Well, well. It looks like I was correct after all. To start off 2025, the first trading day, big tech is under pressure. Okay. This is what I predicted and what I called for was this depositioning from big tech. See, the last couple of trading days of 2024, it was pretty obvious that there was a lot of tax loss harvesting going on in the internals of our markets. They're weak. I mean, we are in a full blown crash right now for most sectors, but the S&P has held up very well because big tech held up very well. You couldn't tax loss harvest in that area, big tech, which has the largest market cap weighting in the S&P. And as I kind of predicted many times, over the past couple of weeks, there is this headline risk to the S&P as you enter into 2025. As you enter into 2025, we all kind of expect that big tech's not gonna do as well as other areas. So you're kind of vulnerable to profit taking, and that's what is seemingly happening today. Apple down 3%, Netflix down 1.5%, Google down a third of 1%, Microsoft down 1.5%, Amazon down 0.2%. Meta's actually up 1%, but generally speaking, big tech is really dragging markets lower today, and it really drags everything lower with it. On that knee-jerk reaction, right? Like today, the algorithms are selling everything. Okay, because big tech's selling off, right? That's why the beginning of the trading day was better than kind of the ending of the trading day, right? Because big tech sold off. It took a little while for the algorithms to start selling other stocks off, but they inevitably did sell everything off, right? And that's why today turned out to be such a crap show. You can really blame it on big tech. Now, I don't think this is going to last, okay? I don't think big tech is going to have this super negative impact on everything, okay? Now, it'll take a little while for things to kind of shake out, for big tech to fall, and for the broader markets to kind of catch a footing and rebound a bit, okay? It's not going to all happen in one day, but this is what we predicted here on the channel. Big tech would sell off in January, and the rest of the markets would rally. Now, the rest of the markets are not rallying today, but I do expect they will catch their footing at some point, and you will see a bit of that rally. Okay. I don't know exactly what day that'll happen, but I do think it will happen. Now, I also think important context. Okay, NASDAQ down about 1%, S&P down close to 1%, Dow is down close to 1%. Russell is actually outperforming on a relative basis, only down 0.15%, so outperforming the NASDAQ by about 5-6x. Okay, so that's a good sign. The VIX is up almost 10% today. And you know what's crazy? Nothing happened. Nothing happened today. There is no reason why markets are selling off. And for pretty much human nature, right? We always want to know why something is happening, and there's no why today. It's just happening, which is, kind of a crazy thing for a lot of people to try to understand. And just that in and of itself creates a little bit more fear. If anything, we actually had good news today. Initial jobless claims came in at 211,000, beating estimates of 222,000. So that was the lowest number we've seen in quite a while. Continuing jobless claims also came in very low at 1.84 million. Expectation was 1.89 million. So things are better than we thought. Okay, economy's doing fine. Labor market's doing fine. So actually some good news today. 10-year treasury yields are actually down today. Okay? Down. But yeah, markets are still selling off. There is no reason why this is happening. It looks like to me, again, profit taking in big tech is causing the algorithms to kind of sell everything off. And this is a massive opportunity at this point. Now, markets were up a lot at the beginning of the trading day today. Okay, let's not be confused. If you take a look at the Dow here, the Dow was doing very well to start the trading day and then slipped, right? As those algorithms really just took over and started selling a bunch of stock. Okay, I don't think this sell off or sell down is going to last in the way that we're currently seeing it. Look at the VIX. The VIX is at 19 today, up almost 10%, spiking from 16 on December 31st for no reason. Okay, the VIX usually does not spike and rally for no reason. Okay, now some people are going to say inauguration's on January 20th, and maybe that has something to do with it. And perhaps, again, that's possible. I wouldn't want to count anything out, right? But there's essentially no reason why markets are selling off today. Now, you are at the same highs on the VIX as you were at in April of 2024, precisely when the S&P was down about 7% from peak to trough. Now, S&P today is down about 4.2%. It will be interesting to see because we did hit a new low. We have not hit since at least, the November period. But you're pretty much at the same level, finding some support where you were at on December 20th. Does this turn into a double bottom? Could we actually bounce from here? Or do markets need to come down a little bit lower and test that 100-day moving average at 576? I think this could be the low because of the RSP, because of the equal weight S&P. It's down almost 8% from the highs, and the average stock is utterly destroyed. You are in a full-blown correction if you look at the internals of our markets. The percent of stocks trading above their 50-day moving average at 33.5%. 67% of stocks or so are in a pretty severe downtrend right now. Anytime you are in a bull market and 67% of stocks are in a decline, you need to just close your eyes and buy. Okay, that's not financial advice. This time could be different. Maybe there's some kind of recession coming or a spike in inflation, something that would create a bear market. Assuming a bear market is not coming, 20+% decline that could last several months or several years. Minus that, you want to be taking advantage of this opportunity. Sure, were investors too bullish on certain areas of our markets heading into 2025? Yeah, people were way too bullish on Apple. People were way too bullish on big tech. That's resetting a bit today. And it will allow for a broader market rally because should markets be this negative on cyclicals and value and small caps? Probably not. Okay. Almost for a fact they shouldn't be, as long as we don't have a recession or another big spike in inflation, that is. But they were way too bullish on big tech. So I think this is actually healthy what you're seeing in markets today. I don't think this is the doom and gloom scenario that some people I already know will be predicting down below in the comment section or on other YouTube videos. Okay. It's not. When markets sell off for no reason, it's typically a buying opportunity. Now, CNN Fear and Greed Index is at 27 today. You are almost in extreme fear. Again, with the context of for no reason. Okay, now you're at 26. You could be in extreme fear by the next 5 minutes. Okay, for no reason. There's no reason why markets are this fearful. Okay, that's important. Now, whenever this happens, whenever you are in extreme fear, or even fear for that matter, in a bull market, you typically want to buy that. If you've only bought when markets were in extreme fear, historically, you've done pretty well for yourself. Okay, I don't think this time is different because again, nothing happened. If anything, we actually had good news today. Good news on the labor market today. So from that perspective, I don't think this is something you want to run away from. I think it's something you actually want to run into. I think it's something you want to take advantage of. Because again, the selling will slow down in the broader markets. I think there's more selling left in big tech, which does create, as I predicted, some headline risk for the S&P in 2025. But I do think it will lead to a broader market rally, and small caps and cyclicals and value stocks and healthcare will really start to outperform big tech and the rest of the markets. And this is going to be a bit of a slap in the face to some fund managers that, want to be overweight big tech. Like, that's not going to work. That's not going to be the trade that works in 2025. And I think you're getting a crash course of that today. But I don't think this is the start of a larger, crash or correction. Okay, now we've already seen a correction. If you look at the RSP, you're already at a correction. The S&P could fall to correction, but I think it's going to be a rotationary correction at best, especially if we sell off for no reason, right? I don't think I don't think the RSP is going to go into a full-blown bear market for no reason, in other words. Just my opinion. Now, tomorrow we have ISM manufacturing PMIs. These have been bad for so long. There's maybe room for some improvement here. If they're bad, I don't think it's going to be the end of the world. Okay, they've been bad for a long time. You've been in recession here for manufacturing for years. So not a big shocker there. On Monday, January 6th, we have factory orders month over month and final services and composite PMIs coming out in the morning as well. On Tuesday of next week, you have ISM Services PMI and JOLTS job openings. On Wednesday, you have the FOMC minutes. On Thursday, you have initial jobless claims. And on Friday, you have non-farm payrolls and the unemployment rate. So we do have some data. The bigger data is obviously Tuesday, JOLTS job openings, ISM Services, and Friday's non-farm payrolls and unemployment rate. But it's kind of a low data period. We really don't have any earnings either. We don't have a lot of Fed speakers right now. So, it doesn't surprise me that markets are selling off. Again, I kind of expected this, kind of predicted this to you guys here on the channel. But again, I do think it will be short-lived and will turn into a fantastic buying opportunity for small caps, cyclicals, and value. The only areas I would not want to buy right now that I'm staying far away from is big tech. And I don't think by the end of 2025, we're going to say that was a mistake. I should have been buying the crap out of Apple at all-time highs or Nvidia at all-time highs or close to. I don't think we're going to look back and, wish we bought big tech right now. I think we'll look back and say, damn, I should have sold some big tech. Now, January is going to get a little bit interesting as well towards the end of the month, January 20th, with the inauguration. If we sell off into the inauguration, if we don't see any kind of material bounce, if we are in, a crash by then for whatever reason, I think that would be a buy the news opportunity. Right? I think the inauguration would actually be a positive catalyst. If we kind of bounce back, markets are in an okay place. It's really a toss-up, in my opinion. Do we focus on potential negative tariff policies, or does Wall Street focus on more M&A activity, deregulation, a friendlier business cycle, maybe a bottom-up kind of growth, right? Where maybe lower income consumers can start to get ahead, something we've seen in like a Trump 1.0. Do we focus on those things, or do we focus on the potential negatives of tariffs and less immigration? I don't know. So I think the inauguration's the next big wild card catalyst. But between now and then, I think any weakness from here you want to take full advantage of in small caps, in cyclicals, in value, in healthcare. This is your opportunity to go shopping. In my personal opinion, it is time to buy the dip. And that is what I am personally doing. Let me know what you guys think about this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.